Amendment Bill, first reading.
The question is that the Social Security, Benefit Categories and Work Focus Amendment Bill be considered by the Social Services Committee. Those of that opinion will say aye. To the contrary, no. The ayes have it. Call on Government Order of the Day number 2.
Student Loan Scheme Amendment Bill number 2, first reading.
Mr Speaker.
The Honourable Peter Dunn.
Mr Speaker, I move that the Student Loan Scheme Amendment Bill number 2 be now read a first time, and I nominate the Finance and Expenditure Committee to consider the bill. At the appropriate time, sir, I intend to move that the bill be reported to the House by the 11th of February 2013. Mr Speaker, this bill is a continuation of the Government's work to bring greater value, efficiency and fairness to the Student Loan Scheme. It builds upon the reforms that were contained in the Student Loan Scheme Amendment Act 2012, which focused on encouraging greater personal responsibility and accountability on the part of borrowers towards their repayment obligations. To recap, sir, the changes in that Act included giving Inland Revenue the ability to receive a borrower's contact person details from StudyLink. And the purpose of that change was to help facilitate Inland Revenue's contact with a borrower who is in default and who has not updated their current address details so that they can re-enter the repayment system. To further improve the repayment levels of overseas-based borrowers, the 3-year holiday provision was reduced from 3 years to 1 year from the 1st of April this year. And at the time I said that the changes would be a significant step towards improving the overall integrity of the student loan scheme by instilling greater fairness and accountability. Mr Speaker, the measures that are proposed in the second Student Loan Scheme Amendment Bill are designed to further consolidate the value of the student loan scheme. As was foreshadowed in Budget 2012, this bill introduces measures to broaden the definition of income that we use to determine the loan amount a borrower has to repay each year. Under the current rules, only income that is taxed at an individual level is captured by the definition of income in the Student Loan Scheme Act. That current definition includes income such as salaries and wages, income-tested benefits, New Zealand superannuation interest or dividends, and personal business profits. However, for borrowers who receive other types of income, such as payments from a trust, the current definition of income may not always accurately reflect their actual earnings or the person's real financial ability to repay their loan. So the purpose of the change to the definition of income proposed in this bill is to strengthen the integrity and the transparency of the student loan scheme by ensuring that the student loan repayment obligations of all borrowers are determined on an equitable basis, irrespective of the type of income they earn. Drawing broadly upon the same definition of income that we use for the purposes of Working for Families tax credits and other social policy programs also means we bring greater consistency to and establish more transparency across the whole spectrum of social assistance. To build on earlier measures to encourage personal responsibility for loan repayments by overseas-based borrowers, this bill introduces measures to introduce an information match with the New Zealand Customs Service to identify borrowers at the border who are in serious default on their loan repayments. One of the biggest problems we face, in fact, in collecting repayments from overseas-based borrowers is access to current contact details and information about this highly mobile group of people. And these borrowers can often fail to stay in touch despite best efforts by Inland Revenue to identify them, to locate them, and just to encourage them to do so. So under the provisions in this bill, Customs will be able to identify serious defaulters when they cross the border and forward their contact details, which will enable Inland Revenue to get in touch with those borrowers to what we might euphemistically describe as discuss their situation. Mr Speaker, they are the main features of this bill. The remaining measures which it contains are aimed largely at improving the efficiency of administering the student loan scheme and refining the technical operation of the legislation. And amongst these proposed changes, borrowers who have income other than salaries and wages will be required to make an end-of-year square-up repayment only if the non-salary and wage income is $1,500 or more over the current annual repayment threshold of $19,084. Currently, the $1,500 threshold applies to some borrowers, but not to others, depending on the combination of the different types of non-salary and wage income. The change we are proposing will therefore bring greater equity to the scheme by applying the $1,500 threshold to borrowers consistently, while at the same time making it easier for Inland Revenue to administer the scheme overall. The other technical matters in the bill confirm the current late payment interest rules and repeal certain changes that have been rendered as obsolete as a result of changes in Inland Revenue's approach to administering the student loan scheme. Mr. Speaker, these and the other changes in the bill clearly demonstrate the government's commitment to the good governance of the student loan scheme as a major Crown asset. And in that respect, sir, I just draw to the House's attention the figures that I released during question time this week, that the write-off cost of the scheme has reduced from 48 cents in the dollar to just over 39 cents in the dollar as a consequence of a range of moves that we've taken over the last few years. What this all means for taxpayers is that they can be best assured that their investment in the future intellectual capital of this country is being used efficiently and responsibly, and that in turn ensures the long-term sustainability of the scheme. Now, while for the overwhelming number of borrowers who do take their repayment obligations seriously, it won't have a huge degree of impact, but it will send a very powerful signal to them and to others that we are prepared to take the necessary steps to ensure that the system is transparent and fair for all borrowers, and that the obligation to repay is paramount regardless of the overall circumstances of the individual. So, Mr. Speaker, against that backdrop, it's with real pleasure that I commend this relatively procedural but important bill to the attention of the House.
The question is that the motion be agreed to. Grant Robertson.
Thank you, Mr. Speaker. The Labour Party will be supporting this bill to the